What's up, hamster? I'm just gonna go over this. I'm gonna go over this a lot. Like whenever I do it, I'm gonna try to go over it as much as I can, just so that everyone's aware of how to do this. Basically, all we're doing is I have a updated list. This one does have options and non-options in it. So if we wanted to get one with only options, if we didn't want to get any results back with shares and just options, we would go to the directory of listed products from the OCC, right? And that's how we get our list. Now, if you want to do this on your own, the way to do it if you just want options, just come here, download the full list. It creates a text file, and then in this list, you highlight everything. And I'll leave this in the spreadsheet too. So sheet 1 will be tickers without options, and then this one here is going to be only options tickers. And then you'll paste the information from the text file here, which is all of the information, and then you'll delete everything except the tickers, right? And now you have your list. But there's still one problem, because you got to take away the spaces out of here, because it's not going to format properly in Alphaquery. So what we're going to do is hit Control F. Actually, I'm going to make sure I don't F this up and go down to the bottom. And I don't want to have anything extra other than what's here. So I'm just going to highlight the bottom. Control Shift Up is how you get quickly to highlight this whole entire column. And now we're going to just hit Control F, and then we're going to replace. We're going to find a space. We're just going to insert a space, and we're going to find nothing. And replace all that. And it should clear all of the spaces out of there for us, which it did. So now we just go back to the top. And then we can make a table out of this column now by Shift Control Down is one way to do it, and then Control T makes your table. And now to get the commas we need at the end of it, we just click to the right of the first ticker here, and then in this box you put equals, and then you click on this ticker, and you put ampersand, and then in quotations a comma. So you're saying this column equals this column, and a comma.
You cannot eat me, you freak weirdo.
So then now it's all good to go. Okay. So now we have all our lists with all the tickers we need. And then one more time, I'm going to copy this and I'm going to paste it with just the values 1, 2, 3, so that we don't have any weird formatting going on. And then I'm just going to delete all this. Rename this column to tickers, no options. And now you can just go ahead and paste this, right? Copy it over and paste it into Alphaquery. And you just paste it in there, just like this. Now it's ready to go. And now we just select our data metrics. So we want sector it's in, so we can eliminate healthcare and ETFs and I guess energy. But I'm kind of want to wait till the end of the week plays out before I give up on energy, because it felt like this was STZ2 and then just completely shit the bed on Thursday. So, but as far as data though, to keep it real simple, as far as finding plays that meet criteria, sector is needed. You can do the close price if you want. I don't really like to use it. You want to do the RSI, and then you want to do the last earnings report date. That's literally all I like to use, just to gauge plays that meet criteria. Then you just run this shit, and it's going to take all these tickers and run it for you. And then I wanted to go over how you narrow down the options to get those daily opportunities. So hopefully this won't take too long to do this. And you can come in here, and if you know how to do this, you can come in here and play around with all the data you want to. This is just what I like to do personally for the core logic playbook when I'm searching for stuff. So now I'm just going to go ahead and highlight everything. Control A. For some reason you still can't export all this to Excel directly, which is kind of annoying, but it's not a big deal, I guess. Just Control A, we'll highlight everything, and then you just wait a second, make sure it copies it all over, and then you just go back here. I'm gonna save this and keep it like this, and I'll just drop it in the chat. That way you can have tickers without options, and then you have only options. So I'll link this in the chat. Oh, whoops, that was the ticker list. Before I link that, I'm actually just going to paste this over to a new one so I don't have to do it again. So this is going to be the spreadsheet that I'll be sending for today. I'm going to paste this now. This should be all the data from Alphaquery that we just gathered a second ago. And there we go. The first thing I like to do, I like to clean up this bullshit at the top. Move all the cells up. Then I'll quickly scroll to the bottom, delete this shit at the bottom. Let me go ahead and drop that spreadsheet real quick. Okay, copy, copy. Send this here. All tickers, only options. Okay, so now we got our data, right? So the way to start narrowing it down, close out of this shit, save it. Once you got your data in here, now it's time to start narrowing all this shit down. The first thing you should do is go ahead and go by earnings report date, filter from newest to oldest, and it's going to put it in order, right? 'Cause remember, the freshest earnings are the best opportunity for core. So that's why I like to go off of earnings first. And then anything that's not the 15 or 16, I'm going to go ahead and just delete it. So everything from here down, I'll just delete. And now our list is much smaller. So from here, what I will do is I will organize it by RSI now. And I will remove everything in between, like 29 and 70. Just so that we know everything we're choosing now is going to be a broken RSI, right? If it's all between, or if we remove the fair value stuff and we only keep the stuff under 30 and above 70, then we're eliminating everything in between. That means everything we put on here is going to have a broken RSI from the start. Okay. And now our list is much smaller, right? That's all we have. This is a daily process. So now what we do is we come to healthcare and we get rid of healthcare. Now our list is even smaller. And this should be the cream of the crop for opportunities for core logic based on everything we just did. We have one put opportunity, 95 RSI. Good fucking lord. Oh, it's healthcare though. I missed the one healthcare. Have we ever tried to play puts on healthcare? I don't recall. Let's take a look at PTE though. Just for shits and giggles. Was it a buyout? Let's find out. The fuck is... Okay, that RSI is not correct. That's not correct. Okay, so it's only call opportunities today, it looks like. So I just start from the bottom. You know, this is it right here. This would be the daily spreadsheet I would drop in the Discord. You know, it took like 5 minutes to get it. We know that they're all calls because there's nothing that fit the put criteria today. And that's as far as the Alphaquery. Now, remember, it's a day behind, so you could still come to your Weeble, and you could just go to your calendar for today and start going down the list, see if anything gapped today. That would be ideal, right? Let me clean this shit off of here real quick. So if we go to calendar, just target, boom, that's a gap down. Target fits criteria big time. So for calls, target it lines up. It's probably a little early, but again, day 2 to 5, like tomorrow, since this one, where did it close? The low was 155 and it closed at 161. So even if you would have bought at the low today, you would have made money on this stock, because it's all about movement. And they had a dividend the day before, which, yeah, man. I mean, is there any? Okay, there it is. There's the gap below. So it's probably going to trade in between this for a minute. That's the thing. You got a gap below and above. Where did that go? Come back, you bastard. It's at 134, 139. Interesting. Let's keep looking. No gap there. RSI's broken, but no gap. VS. Nope. Auto. Oh, there's one. So today was gate 2 of this one. But you see how on this one, the RSI, like if we take it and we look at this and we compare it to target. Actually, let me just do this. So this one is auto. And then we go to target. You see how this one's a little bit more, they're almost the same, but this one looks a little bit more pronounced, like it's, you know, it's more flattening, it's trying to curve out a little bit more.
Hey Charlie, got a question for you.
Yeah.
Do you look at like previous gaps? Like if there's a gap like previously?
Not if we're looking at something like this, no.
Mm.
But if
Okay.
let's say like, you know, with KC, like if there's no recent gaps, right? And then you're talking about, well, the one way up here, yeah, I would imagine it's a factor, but not. There's no telling how long it could take. You know what I mean?
Gotcha. Okay.
The reason why is that the reason why I like the gaps that are fresh is because the difference is, yeah, this gap may exist far back here, but you know, the RSI is not broken. That's the main difference. It's whenever those three things line up, it's when you have favorable odds of winning.
I see.
Let's go to SA. So even if you look at them, like just these ones that have gapped recently, day 2 to 5 is typically when you would want to, you know, enter in and then start working the strategy. But day 2 is when this one went up. This one here didn't really have one. Some stocks are weird, like this one, a 1, 2, 3 gap. RSI is still broken though. It just depends. Let's just try a little bit more at LMFA. This is like the lowest amount we've had, I think, so far. Nothing there. BRDS. Nothing there. LTRY. Jesus, I'm gonna put this back on auto. BZFD. G box. Oh god, green box is on there. That thing was like the #1 gainer in the whole market last year at a certain point. And not a lot there today, but there's other, if you exhaust the spreadsheet, there's other methods to do it. So now we've gone down the spreadsheet, nothing there today. Wasted time. Anyways, okay, so now we can check 52-week low and high. New high. There's one. There's a put. And this may actually be the perfect time to get this one. Let's just go ahead and look at it. So RSI is broken at 74. Hit a new 52-week today. And it gapped from 982 to 1037. Let's go and look at the open interest now. Oh, there's no options in this one. What the fuck? It's supposed to have options. It's the OCC data. That's funny. Oh, wait, no, it's not. We just looked from Webull. Whoops. Okay, so no options there. But that's the setup you want for puts. Tidewater. There's another one. This one has options, but I don't like the gap.
Charlie, what was the site you used to get all tickers?
Directory of listed products from Options Clearing Corporation.
Got it. Thanks.
Yeah, no problem. Let's see. And you see how like a lot of these earnings, like they have similar charts, right? A lot of these tickers hitting their 52-week highs, they almost kind of look pretty similar. Oh, VTNR's on there. No way. Fucking bastard. Lionheart cap. Let's go. SMHI. There's one. But you see what I mean? Like how they gap up and then like they try to correct immediately. That's what you're exploiting. I don't see anything here. There's one. So this one here, let's take a look. I do like to check the downside, but there's one here. I mean, this one doesn't have any to the upside. On a put, you'd want to look at the upside, right? If there's nothing, there's nothing. There can't be. It just got listed in 1975. There's been no gap. This is the highest it's ever been. So this is probably a really good candidate here. GFF. It's got options. Low open interest. That's what you want to see. And look at the volume today. You got 90 puts today for volume. Open interest is 296. And then the way you would do this is open interest here is 128 bigger or smaller than 0. It's bigger, so you could expect it to go, or it's not going to make it past this point with this illiquid of a stock. Same thing with this next one down. It's 84 to 23. So this is the one to buy, would be the $25 put. Or if you want to go in the money for a little bit of protection, since it's so close to 30, you would want to go at 30. But considering the price difference, I mean, look at the price difference. 2 cents or 58 cents. I guarantee you Max Payne's, I would assume it's maybe, it might be 25. We can look. Let's see here. GFF. Oh, it's 30. Okay, so they probably actually changed that. So really this one, we can go and look now 30 days from now, see if they can kick anything. I'm going to do some math real quick. Hold on. I've always wanted to calculate this. Because with these are so illiquid, like this may actually work. Hold on. So if we do 296 minus 90, that's 206. I'm trying to see what these numbers add up to. Okay, so hold on. God, if they did it all the way out here, plus 916. And again, like this is where the IV it plays a part, right? Because if you look, the IV for the $30 puts is lower or lowest here, right? It's 46.19, and then everywhere else, well, it's 41 here, 73 there, 46, 41, and then 40. Okay, so it goes down naturally. There's just no volume on the call side except right here, which is, this is your resistance for July. So I would imagine it's going to close somewhere between 25-29 by next month. Just I would like to have a little bit bigger spread than that, but the IV for this one looks real good for 617. So you got your calendar as a way to look at shit. You got your 52-week high, and then you got the spreadsheets as a way to do it. Concert. Oh, that's pharma. No.
When you say that the IV looks really good, do you just mean that it's below the 130% mark?
Well, and just as in comparison to the other weeks, because like remember, like IVs only, you can't really compare IVs between stocks. It's only, you got to compare it within itself. So like if you see this chain here, and you're thinking about like a put for a play, let's go back to the one I was at. What's the name of it? GFF. So like for example, this one here, it's 73%, and the price is what, 58 cents. This one's lower, you know, and it's really, considering the time difference, it's not that much more for a month further out. And then if you go here, this one's 220 with even lower. So it's all about, you know, relative to the current expiration. Like, would you rather buy a put with like 3 months for 220 or 2 months, or I guess a month now, 182? You're basically paying a $40 difference to hold this another month, basically, because of the IV and other factors. But it's just, you know, all about relative to itself. You wouldn't want to buy, for example, like if this one was like 180, but there was like another one here that was sitting at 70, you'd probably want to go with the one at 70 because it's probably not going to cost too much different than the one you're considering playing right now.
Gotcha. Thank you.
Yeah, no problem. Yeah, because whenever you get prices this close together, like 182 versus 220, that's pretty light difference in price for the amount of time you get. And then here, where are they at? They're at 368 here. So this jump in price here from 182 to 220, and then it goes from 220 to 368 because you skip a few months. There's a 3-month gap in between here. This is quarterly, and then there's only a month here, a month here. So considering, like, think about that. These expire in 2 days, and they're worth 58 cents per share, which is $58 a contract at the mid price. And then you go a whole month out, you know, from now, and you're looking at basically 6 times more, right? No, I'm sorry, three times more. But you have 2 days left, so it's like, you know, in those 2 days, think about how much theta could eat away at the cost of this. You know, time decay. Time decay won't affect these as much. So these are going to hold their value a lot longer. Granted, they stay in the money, than these will. To expire in 2 days. That's all. It's always a balance of time versus premium.
So I've been a little out of the loop, and I noticed, was like last week or the week before, that our gap plays weren't really, it was put on pause. What conditions made that happen?
The SPY, all the narratives around the FOMC meetings and all the index rebalancing and all that shit. It's whenever macroeconomics take over, like, everything follows the ETF market, right? It's supposed to be the other way around, but there's no shares trading, and the indexes are there's a big narrative, like the rates are being risen for the first time since like early 2000s. A lot of money's been moved around right now, and when that happens, despite the gaps being there, if we look at TUP, for example, perfect example. I mean, look at it. Look at this shit's broken as shit. But this thing will rip. It's going to come to fruition. It's just, I mean, we got 3 gaps to the upside now. It's just been obliterated due to the macroeconomics. If the SPY tanks, anything attached to it's going to tank with it. It's kind of like a cause and effect kind of thing. And then Jerome keeps extending it. Like this week, he spoke on Tuesday, or today's Tuesday, right? Or yesterday. He came out and he extended another 2 days. So we haven't seen anything really come to fruition for this cycle because of all of the fucking narrative. So next cycle for the options, which starts next week, and when I'm saying cycle, I mean, if you look at the expirations, this cycle is between May and June. This one's between June and July. This one's July and October. There's no weeklies. These are monthlies. And then after October, you have like a 6-month span or 4-month span of no expiries at all. So, yeah, I mean, to answer your question, just be the macroeconomic events. So we had like record-setting SPY days last a couple of weeks. So whenever that shit happens, that's where all the attention's being put. And these are going to continue to go in their respective directions. But this one's due for a nice little pop here. It's been consolidating at 10 RSI. It's ridiculous.
So when,
Hey, do you think with Cup, there was an investigation started yesterday about bad SEC practices and stuff? Do you think that'll affect anything?
With what, like, what is it pertaining to?
They were talking about how they blamed their earnings and stuff on Ukraine and all that, and it's like, well, you only had like 2% of your net income based off, that geography.
Who was that affecting?
Cup.
Oh, Tup. Okay. Yeah, I mean, was the company itself saying that, or was that like the news narrative?
It actually wasn't in the news. It was a article that the law offices of whomever, McMillan or something like that, posted.
Huh.
That they're looking into an investigation.
Oh, they're investigating Tupperware, the company? I guess? For like
that, correct.
Oh, okay. I actually haven't seen that. Let me look into that. There may be...
I would assume it has to do with plastics in the sense that oil makes plastic. So
yeah, right.
They might be just averaging out like, hey, we expect, to make another Tupperware thing, it's going to cost us an extra 10%. So we're going to start averaging that into our like equation, whatever they have.
Yeah, it sounds like an excuse for their price tanking like it has been. But what I like to do whenever I hear shit like this come out, I like to look at the forms that get filed, like this. And then you look at like what are the executives doing at the same time they're telling you this. Like he just bought shares, 2,500 at 993. Direct ownership, acquisition. Okay. And then what I'll do is I'll go to their 13F and look and see what institutions have been loading up on it. Let's go to TUP. Institutions are in it about 30% apparently. Oh, that's GameStop. Okay, hold on, let's go to TUP. Yeah, I mean, look at their institutional ownership. It's 112%. Capula is a new position. That was yesterday. BNP Paribas dropped 42%. Nomura Holdings got out. Jane Street dropped most of their shares, some of their calls. Susquehanna got out. So what's going on here, and what I think happens when in this situation, is the institutions drop out, the insiders load up, which what we just saw on the other page, and then everyone's happy, right? But you got all the big boys in here, like all the same people, like Citadel, all the market makers are hedging here for TUP.
Yeah, all the market makers are getting out.
Yeah.
From what it looks like there.
Yeah, look at their top owners. Oh, hold on, Miller William, hold on here. Who is this guy? I wonder if he's a board member. William H. Miller III. Oh, okay, Leg Mason. Yeah, these mofos are all these news stories. It's all the whole point of it is to give excuse for price action, man. I'm convinced of it. Like, how much money are these motherfuckers making? Yeah, surely they got earnings on here.
They're profitable, so.
Yeah, that's what I thought. Financial statements. Here we go. Revenues up 16% year over year. They're up in cash. Their debt skyrocketed. Good God, 7,700% long term.
Yeah, probably at low rates, right?
Yeah, exactly. Exactly. If only the market ran off of fundamentals, it would be a lot easier. Yeah, I mean, I've seen companies that, I mean, it doesn't matter how much money they make. They can make billions, millions, thousands. It doesn't matter. All this shit seems to work the same way in this current environment. It's weird. Is there any gaps to the downside in this motherfucker? I don't think there is. I don't think there is. When did they get listed? 1996. Its third day was a big ass gap up. That's funny. And then that gap filled here. Like, if you go out to some of these stocks and you just map out these gaps, it's fucking nuts how it all kind of plays out.
It's just always been there.
No, that one got filled actually. So you'll know if they're not filled if you like go back in time and you see them, like this one here. Sometimes, oh, I'm on the weekly. And like, for example, some time frames like this one here, like you won't see things that you'll see on the 30-minute, right? Just depends. Like the 30-minute here, you got the 424 to 426. I don't know if that's there on the daily. It's not there on the hourly. Is it on the daily though? I don't think so. Yeah, it's not on the daily, but it's right there.
Is that because the price action is just not as high?
Well, it's because like, let me think. Hold on, because if it's here, the high of this candle was so at the 1 hour mark it cut off, but at the daily, it went higher that day. So hold on, was the high of the day? Okay, this candle here, see? This candle before this one, if you look at it, this one technically means there's no gap for the daily, right? Because the daily doesn't account for individual candles, it compiles them all into one. So when you put those two candles together, it makes this candle, which is a 2 hour candle. So basically, it should stop showing up on the 2 hour, I think. And yeah, it does there. Let's see if it's here. No, it's still there. It's a little bit smaller. So maybe the 4 hour. Yeah,
Makes sense.
it goes away on the 4 hour. And that's what I noticed today. I was like, oh shit, so you can go down and you can find more gaps on lower time frames. So this one here, if you look, I think this is exactly where this motherfucker is going tomorrow. It filled this gap today. Right here, and then it used it as resistance the rest of the day. It never went back above it, and how did they fix that RSI? That shit was broken. There's some crime going on here. That's nuts. That was not like that earlier. And you see how the 10-minute road oversold all day? And it's the only one with the bearish crossover, and it finished right at the fucking cross. Look at that. It's like it's so systematically designed. It's nuts.
It's beautiful, man. Really.
I know. And then you
precision
look
on that. That's what I'm saying. Like all these
I
stocks.
know. It's fucking crazy. And then you
all
look
algos.
Yeah, and you look at the 30-minute, and it's bullish cross. But look, the 200 MA is the resistance of this gap, and this is like the support. It's like it's trading well above the price. And historically, when you look, you get a pop. It doesn't like to trade below it. Wait, whenever the what's it called? The 20 MA. Like whenever you see this shit happen, whenever it's trading below like this, you get these big ass rips back in fair value in between the two. And then it goes above the 200, and then it doesn't like being above the 200 at all.
It's almost like the pattern we should be playing.
Yeah, that's what I've been trying to study for like the last few weeks. Is I see something here with these gaps in like the time frames. It's just hard to decipher it.
Well, I mean, right back, if you go back to that last view you had.
This one?
And yeah, so see, go back a little bit further. Right there. So right there, you see the W. I'm drawing it on my screen like you can see it. But at the beginning of the thing, so go
Right
to
here?
the right beginning. Yeah, see that full W?
Yeah.
You go up, then you get popped down all the way
Oh,
back.
this one right here? This big W
Yep,
right here?
big W, pop down, going down to the EMA.
Yeah.
That's level 1. Pop up, that's level 2. And then pop up to where you have that line of resistance. You see how there's 2 points that hit it perfectly almost?
Right here?
Go back to the your red line you got.
Oh, yeah.
Right there, that's a perfect M.
Yes.
Going down. You know, it's the same pattern over and over.
Yeah, exactly. Yeah, exactly. Let me make sure this gap's accurate, because that's what I've been watching is these gaps, and like the resistance and support is nuts. I just need to make sure there's a gap there. Hold on. I can't remember.
I'm tempted to like look at it just on RSI, like basically use broken, above or broken below as an entry point, and then fixed RSI as my exit.
Yeah. I mean RSI. I mean totally. That's RSI's like oversold like this. It doesn't like to stay there very long. Like if you look historically, it doesn't stay there very long at all. And it has massive runs.
That tells me it's like a perfect time to get in, and then it stays in the middle in the fair
Right.
zone quite a bit of time.
Yeah, it's fucking crazy, man. Like how all this stuff kind of ties together. I need to redraw these. It's got all jacked up. Hold on. I'll start.
You mentioned cycles on options, and I'm wondering, is there any significance to like the 3 option cycles that they assign for public markets, like the JAJO, FMAN, and MJSD, like the months that they group them in?
I think so. I think it's based on earnings, I would imagine, because it seems to me like every time I look at charts, around earnings, they're all very similar. I'm actually not 100% sure on that one.
Be interesting to see if there's anything correlated to our core play.
Yeah, I'm sure there's tons of shit out there we could be looking at. It's nuts. So I like to put the line in the middle of the gap. And these are fuck. I need to do. I don't like doing horizontal lines because, they extend past the gap and it looks confusing. Hold on.
I mean, and to be fair to, I was reading a couple reports yesterday. We got to start making a distinction between what's on the New York Stock Exchange versus NASDAQ, because their fill orders that they do, I was reading that some market makers, of course, they'll take price as whoever has the lowest price, let's say, or the highest price, whichever direction it is.
Yeah.
But the size of your order, too, plays a huge factor. So I can't remember if it was the New York Stock Exchange that will take actually the orders from the largest order first, and the NASDAQ will do it from the smallest order first. So just, other things to consider.
Yeah. I mean, there's tons of technical shit like that makes a difference for sure. Let's go here.
That's crazy. That would that means that we could find like super penny stocks and just load up on crazy amounts of volume.
Okay, let's do this. I know there's one to the downside. I think this one should be marked correctly. Let me get back on the hour. There's one up there. Yeah, you don't even need the lines though, because the wheel does it for you. I mean, look, perfect. Like this is the thing you said, I think, right? The W that you were talking about. It's spot fucking on. Spot
it's
fucking
a
on.
market maker formation right there.
And that's your resistance right there. These things keep going sideways. Oh, I didn't know you could increase the scale that slow. That's badass. Straight. All right, I think that's straight enough. But yeah, I mean, so if we go now and we just go down these time frames, like that's insane. And look how the 200 MA just fucking or the 50 MA grazes that shit and then goes back down. It's nuts. And
Oh, you're measuring the middle of the gap?
yeah. Now look, the 20 MA doesn't go below this line until it gaps.
You're gonna see that a lot with EMAs and gaps. So because it's all just volume at the end of the day.
I mean, that's your retracement right here. This is how you play the SPY, in my opinion, is off these gaps. This screams bearish, while this screams bullish, while this screams bullish. Then you go to the daily, and it's all oversold as shit. This is your daily picture here. This shit's fucking all wonky. And look, same thing. Look at this. It just sits there and rides support at that gap. Whenever, I mean, think about it. If everything's out on a loan, certain things can't happen. So when you see all this stuff kind of go to an area and then it just stops and just, like, for example, the 10 minutes the only one with a bearish cross. Everything else is bullish cross except the weekly. But then again, the weekly's oversold almost, so it's just nuts how much things conflict. But at the end of the day, what seems to make the most effect of the market is these gaps, where they are respective to where the price is at the time. This is the big one. I think this is where they're aiming to soft land, but we're talking like that's all the way down at 279. It was a long way to go. And then the COVID gap was created here. 223. We'll see, man. I think we got to go up before we go back down. Slightly. At least to fill this gap. This gap's got to be filled before we take the next turn down. It's the last one to the upside. 260 something, I think. But it's just weird because you pay attention to where the gaps are, respective to these MAs, and you got this one here, slight gap. It's in the middle of the MAs, right? This is where I expect it to run to tomorrow, somewhere around here, in between these two lines, which would put it back up next to the gap. And then you look, hold on a second, 30-minute. It's in the middle of the two, basically. Go to the hour, and now that's in the middle of the MAs. It's fucking nuts, dude. It's like the midpoint, right, of these two MAs is gonna be where like around where it finishes tomorrow, in my opinion, like right here. So around there. 406. We'll see though. It's definitely something I would pay attention to, because it seems like that's the case. The gaps control the MAs, which control the other TA, which controls the people. Anyways, I'll be back. I gotta go. My kids are acting up. I'll be right back.